How do you price your accounting services? At first there was pricing 1.0 for figuring your accounting fees, not super profitable. Then there was pricing 2.0, better margins, but still hard to sell your firm. Now there's pricing 3.0, which I believe will be the future of accounting. It's a win-win in terms of premium margins and boosting your firm's exit valuation, but it's not an overnight strategy. Now, if you're looking to just boost your margins or increase your fees, stick with pricing 2.0. But if you're in it for the long haul, like me, you're going to want your firm to be actually sellable. Not only should you know what your firm is worth today, but what levers to pull to maximize its valuation. And just to give you a little hint, it actually involves doing less work, not more. Now, my newsletter last week was all about firm exit strategies, which I did a bit of a deep dive on. Now, this Saturday, I'm going to be introducing pricing 3.0, but I want to give you just a little taste of how it works right now. See, pricing 3.0 taps into firm valuation strategy and can be the difference between selling your firm at a 0.75 to 1x multiple to a 2x plus multiple. Now, maybe you're not there yet. Maybe you're still using pricing 1.0 strategies like hourly billing or cost plus pricing, but it's time to evolve into value-based plus pricing, or as I like to call it, productized pricing. And this is basically pricing that can actually compete with the valuation of tech software as a service companies. Now, you say, hey, Mark, what do you mean SaaS companies? These are companies that are traditionally valued pretty high and usually a lot more than service-based companies. So let me try to break this down for you a little bit. And just to give it to you from a personal perspective, I happen to be the co-founder of 2 profitable SaaS businesses, both in the accounting space. And I see the SaaS model as the future of accounting. Most accounting firms are still relying on outdated pricing models that really cap your profitability. But more innovative firms are adopting strategies that are taking advantage of more advanced strategies, not just tiered pricing strategies, but productized pricing strategies. So let's dive in. So first is what I call pricing 1.0. And just to give you a few examples, the first up is cost plus. So it's pretty simple. You're basically taking what it costs to offer your services and you're just adding a percentage to that amount to determine how much you should charge clients in order to make a profit. Now, there's advantages and disadvantages. In terms of cost plus, the advantages, it's simple to implement, easy for clients to understand, still allows for profit if your expenses are variable. Now, there are some disadvantages. It doesn't take competitors into account. It's hard to figure out proper margins. Now, there's also flat fee pricing. So this is where fees remain constant no matter how much time and resources you devote to a project. And this approach can work well for basic repetitive services such as preparing simple tax returns. Doesn't work too well for complex projects like audits or FP&A, different components of that. Now, there are advantages and disadvantages to flat fee pricing as well. So some advantages are simple to implement, easy for clients to understand, you and your clients know what to expect. Some of the disadvantages are it's mostly inflexible and it doesn't always reflect as much value as clients will actually get from your service. Now, let's take a look at another one. Now, we're still under pricing 1.0. Let's look at competition-based pricing. And this is where you're comparing your offering to that of your competitors. And some advantages are you can help prevent losing out. It can help you prevent losing out to competitors. It can help you market your services. And the disadvantages are prices can be set too low because you're always trying to compete with your competitors, right? So naturally it seems to lower your price. Sometimes it creates a passive mindset towards pricing rather than proactive. Now, finally, let's look at hourly billing. So this is where billing clients requires firms to track every hour spent on a project. Then you present a list of services performed along with the hourly rate for your client. The advantages are super simple to implement. Disadvantages, it leads to a surprise bill for clients at the end of an engagement, and it doesn't always reflect the value your firm can offer. There's tons of other disadvantages with bogus timesheets. You may have seen that before. So now I want to talk about pricing 2.0. So this is really value-based pricing, and value-based pricing is when you price your services based on what your clients are willing to pay or the value they perceive in your service. Often when a tiered or menu-based pricing mechanism is employed. So you're probably seeing like a bronze, silver, gold kind of plan. Now, advantages and disadvantages. So advantages, you can improve client loyalty and sentiment if used effectively. Other advantages, it helps prioritize clients, and it's very effective when leveraging price anchoring techniques. So you start with the higher price and you desensitize the client when they see the lower prices, right? So maybe you're starting with the gold and then they get a sticker shock from that, and then they see a lower price on silver and bronze. Some of the disadvantages is it requires you to have a deeper discovery call or a more of a consultative approach to sales, and it's generally more complex to implement and maintain. Now, lastly, let's look at pricing 3.0, and this is what I call productized pricing. So this is a combination of value pricing and creating products out of your services that require less work to fulfill and can operate passively. So this results in the highest profit margin, since it includes what I like to call build once, sell twice components. So these are like build once, sell twice products such as courses, communities, and platforms that you can build on top of your services model. Now, lots of advantages come into play here, and this is just a brief list. So you have generally higher profit margins, more passive income streams, scalable growth. It monetizes the prospects not ready to hire you, right? So they may not get you for a particular service, but they may subscribe to one of your courses or one of your products that you're offering until they're ready to go into a higher level, maybe advisory or consultative service with you. It also can increase the sales multiple when selling a firm because, as I mentioned before, productized services are generally more valuable, right? It almost has that scale of a SaaS company, and you can actually take an accounting company to a SaaS model, and there's plenty of examples. Bench, if you heard of that, that's a company that has invoked the same kind of model. A few different disadvantages: it does require upfront investment to create these products, right? It's not super simple. It's not an overnight thing, and you need to develop what I like to call a product mindset, right? So a lot of accountants have a customer or relationship mindset, which is definitely the foundation, but you have to start to think not in terms of services anymore, but in terms of products, okay? So this is a bit of an overview. I'm going to go into this a lot deeper in some of my future videos. And at the top of this pyramid, you can see exit. So it's a whole nother conversation on the various exit strategies, but keep in mind as you go further up that pyramid, if you're doing it right, your firm value increases and it makes it easier to exit. I talked before about different exit strategies, and these become easier once you go higher in that pyramid. So that's it for today, and I will see you on the next video.